the businesses that will typically get acquired successfully are the ones that have, like you're saying, it'll take 3 to 5 years to get acquired. But if you're going to get acquired, you've got to have these things in place. Like, you can't just rock up, have nothing to sell. If you're going to succeed in business, you've got to go out there and you've got to look for this information. You're going to get taught this at TAFE. Like, these are things if you want the answer, you've got to go look for it.
They're looking for a distressed business, like you say. They're looking for a business that might have, especially now, people are buying businesses just to get hold of team members. So that's quite common now across the industry.
My favourite person to introduce on the Sideshed podcast, back again, Matt Jones.
Hey, Jonesy, I love this podcast as well because I don't have to think too hard about remembering your name, right? So it makes it really easy for me.
What's been happening in your world, mate?
Plenty happening, working with our great community of clients. So it's really always getting energized when you're working with people that want to change and that really embrace community and that they're happy to share. So, yeah, it's been really pleasing seeing great results where essentially clients are really earning more profit, working less, and ultimately, using that profit out of their business to transform their lives, whether by the forever family home or investments, and ultimately able to go away for 6, 7, 8 weeks at a time without having to worry about it and come back and the business is still profitable. And guess what? Clients are happy. And often the clients say, hey, Mr. Business Owner, you should go away more often.
So I've had a decent amount of exposure with your program and with some mutual clients and things like that. And yeah, everyone loves being part of your community. And I mean, your churn rate is a pretty good dictation of that. It just don't have any kind of thing. Average retention 3 years or something. So the program's good.
Yeah, no, we're very fortunate. Yeah, we've got people. 8 years have been on the program with us, 6 years. The bulk of our core guys and men and women, been with us for 3 or 4 years.
Yeah.
So it's really good. So we're very big on nurturing and building a good quality community, and really working through each different facet of their business, through the financials, through the planning, through their team, especially now, really what we call winning the war on talent. So they really build their employer brand. So they're really attractive to new team members as well as retaining great team members. And then, of course, educating the client why you are the experts at solving their problems and why you should be charging premium prices and why you should be starting to say no a lot more than you say yes. All that sort of good stuff, mate, that, you're right across.
Yeah, mate, it's pretty close to home, to be honest. Like a lot of it, like we typically, we're in the lead generation space for trade businesses, the journey that we typically see, probably in line with what you're saying here, although not so much on the marketing front, but like they come to us because their immediate problem is we need more leads or we need a better quality lead. And the next problem so we solve that problem, which then unravels the next problem, which is, okay, our sales process needs to evolve. And then once the sales process evolves, the very next problem, 100% of the time, is fulfillment. Like we need to hire staff to keep up with now this new close rate that our sales teams are performing at, or raise our prices and stop taking on so much work. So
100%. And that's we're very big, and especially over the last 12, 18 months, where obviously there was COVID, there was obviously a lot of issues with weather, especially on the east coast of Australia. So during that time, there was a lot of staff that were down as well, like through sickness and illness, or you just couldn't get to jobs. So capacity was down. So what we really ingrained with our team is less is more. Do more output with actually less capacity. And if you challenge yourself to that, and it all comes down to great planning, great preparation, great resources, so that essentially, in an 8-hour day, you're punching through 12 hours of productivity, where most people, when they think that they need more, during a 10-hour day or 8-hour day, they're only really getting through 3 hours of productivity. Because a lot of the times, because of the lack of processes, the wrong clients, people are falling over each other. Everyone's busy, but they're not productive. But coming back to that, that's just like, I need to sell more. Now I'm going nuts. I need to stop selling. Stop. Because the worst thing is you fail to deliver on your promise, right?
The thing that we're seeing, which is, sort of a breath of fresh air to, like the people that we're working with, is like having more conversations gives them more options. Like, you don't have to pick everyone, you know, like it's that situation when most of the people that are coming to us, well, not most, but a lot of them, they're very heavily dependent on word of mouth and referrals and that kind of stuff. And then having like consistent leads coming in, which is extremely new for them. The quality is not the same as a referral lead. It never will be. But the point is they've got more option there. They don't have to take them all, because if they're converting the way they should be, then, you know, they're busy, you know.
One of the things that people are going to be wary of too is why are they getting referrals? Sometimes you might be getting referrals because you're the cheapest in the market.
Right.
Yeah, go to Frank because he's cheap. You don't want those sort of referrals. So often what we find is the referrals or the leads or the people that you started your business with, generally you got to get rid of them over a period of time, because often they're not good for your business. You know, what gets you started is not going to get you to the next stage, get you to that next position. And this is where, again, the lead generation's on point. But more importantly, what are you the expert in? You know, as you know, mate, if you go to a website and they're trying to be jack of all trades, they say they do everything. It's not really giving you the confidence that they're going to be expert in your need. I'm not going to be expecting to pay premium price, because it's a bit like the old GP and a specialist doctor, right?
Yeah, exactly. So today we're talking about how to position to profitably sell your business. We've covered a little bit in the past on exit, but it seems like a topic that never really gets old. And the reality is, we spoke offline, you know, at some point, people will exit their business, and some of them will get paid.
That's right.
Yeah, so everyone will eventually exit their business, but only a handful of them will actually get paid for it.
Yeah, that's right. Like, that's one thing that I think every business owner needs to understand, that everyone will exit at some stage. Most people need to understand that 55% of exits come out of the big Ds. So it comes out of either divorce, disaster, especially disaster where they're talking about the COVIDs or the floods, death, disagreement, or disability. So 55% of exits are forced. And generally, when they're forced, you're not going to recoup anything. So in other words, when we say recoup anything, is that often business owners have built, 5 years, 10 years, 15 years, 20 years slugging away building an asset. And this is what I think everyone needs to understand, your listeners, is that you're not building a tradie business. You've got to look at your business as an asset. So it's not just a job, it's an asset. And so as an asset, you've got to think about, okay, how can I build value in that asset? Because when you don't plan for exiting and things do happen, that you're generally got to give it away. You've got to shut the door. So therefore, what we call, you're leaving money on the table. And often those businesses, over all those years, some of them, as we know, Jonesy, like some are battling to pay a wage to themselves. Some of them have been, battling to get profit or drawing. So for some, a big payday can be on exit. Now, to successfully exit, and we're aligned, we're affiliated with the Institute of Advisors. So we do a lot of work with business brokers. We see firsthand the good, the bad, and the indifferent. But the good exit, the good profitable exits are those that start early. So I'm talking potentially 3 years out, 5 years out. It takes a lot of work to what we call create business value enhancement. And I'll go through a couple of two key areas of that indicators to drive that value enhancement. But it takes a lot of time to really get that really good exit.
And correct me if I'm wrong here, but I know in my experience, it's the businesses that will typically get acquired successfully are the ones that have, like you're saying, it'll take 3 to 5 years to get acquired. But if you're going to get acquired, you've got to have these things in place. Like you can't just rock up, have nothing to sell, like, and we've got loads of clients
Correct.
that have been acquired. We've got loads of, and I mostly from the company I used to work for, like he's on this mission to acquire businesses. And I think they're probably a little bit different. Like they kind of look at businesses that don't have a lot of the systems in place, because they want to buy businesses they can just basically take and plug in to their existing operation, which I think is a little bit different from someone who might want to come along and buy a business off someone to operate it.
Yeah. And that's where there's a lot of different layers, all the different levels of a seller. And like there's a strategic buyer, like say a strategic buyer is coming in often, they're looking for a distressed business. Like you say, they're looking for a business that might have especially now, people are buying businesses just to get hold of team members. So that's quite common now across the industry. Yeah, either maybe they're getting it for either team members or a client list, and there's no profit there. There's nothing in the system, but yeah, they're grabbing that and bolting into there. So they're really buying that in a distressed state. Whereas what we want and what everyone deserves, if they plan accordingly, is to be prepared for selling. Like you say, if you're getting tapped on the shoulder by someone, that's great, but you want to try and maximize that value. And this is what I want to sort of talk about. People now, like on the back of this call, can start thinking about potential their value. We talk about multipliers, so they can do a quick little exercise there to work out a quick sort of sum of, okay, what am I potentially valued at, and where potentially could I be valued at long term? But yeah, it's all about the preparation and the planning for it.
It's definitely worth having that conversation, because like that old, fallacy around my business is worth this much because of the turnover. And you and I both know that it's not about what your turnover is, what's left over. Like if there's no profit in the business, it's not really worth anything, is it? And I think people are sometimes pretty disappointed when they learn their business is only a multiple of profit, not multiple turnover.
No, that's right. And look, I think this is sort of getting into it now. I think looking at for everyone who doesn't know, the basic rule of thumb is, you value your business via a risk multiplier, right? And generally it's based on an industry risk multiplier. Now, what that means is, your EBIT. So for those not sure what EBIT is, it's your earnings before interest and tax. So again, you got your revenue coming in, pay all your suppliers, pay your team, pay your overheads, and then whatever's left, take a wage as well, just a normal stock standard wage, and then whatever's left before interest or tax, that's what gets multiplied. So let's just say here you've got a business that turns over $1 million or 2 million. Let's say 2 million, and then only has $100,000 profit. Okay, that then becomes a multiple. Now that gets multiplied against the risk. So the two key factors in this multiplier: one is your EBIT. Okay, so your profit, operating profit, or your EBIT, and two is the multiple. So the risk. What do you think the risk is going to be gauged on? What do you reckon?
Exposure, like team deliverables, debt.
The number one thing is, okay, hey, Mr. Ryan, that's great. I'm gonna buy the business, but you step away, and that $100,000 profit is zero. So the multiple, the risk is very, very high. So the multiple is very, very low. It could be zero. So or one. Okay, that's great. I'll give you $100,000 profit times by one, so it's actually valued at $100,000. Now the average at the moment for construction and trade businesses. Now, this is what people need to understand, is that there is, again, a certain amount of range. Now, the average range, and this is through the Institute of Advisors, these are through people that are doing it every day in terms of brokerage. The multiple range at the moment on average is around from 1 to 7. Now, back in the day, when I say back in the day, not that long ago, but especially on software, there was some multiples of like 8, 9, 10. Now, a lot of those multiples were on subscription-based, high revenue, so it's all locked in. So they were getting some unbelievable revenues. What we're seeing now across the board, it is contracting. So it's between that 1 and 7. Now, for most construction industries, now a lot of these are builders, not so much the tradies, but the builders, it's around that average around 2.5 multiplier. Okay. Now, if you're under $2 million, you're going to struggle to get a decent multiple. That's just the bigger the business, the more opportunity. And that 2 million is a bit of a sort of that breakthrough to that next sort of level. But as a business owner right now, if you're thinking, okay, well, how do I increase the value? How do I become more attractive? Number one, we've got to increase your profit or your EBIT, earnings before interest and tax. And you've got to de-risk the business. So, and the number one thing is, how do I create a business that can operate without me?
And is that the risk you're talking about? Is it being dependent on any one individual?
It's like a couple of things here, and I've just got sort of some of the things like, it's about the risks are less reliance on the business owner. Cool, that's a given, right? Potentially looking at, for your business model, can you lock in recurring revenue? So in other words, too, for a lot, can you lock in contracts? That de-risk.
Literally this morning, I did a podcast with a guy on scheduled contracts. Like, contract agreements, schedule agreements.
That's that's what you want to come in as a business owner. Right. Cool. That's an asset. I want clean, reliable financial management accounts, your profit and loss, your balance sheet, your cash flow. If I'm a business owner, if I want to buy it, I need to see the numbers. And this is where people need to understand, having cashies on the side is not good. Having stuff that's not up to date is not good. So you need to have your numbers squared away. So I'm looking at true numbers. Also, too, we call it add backs. Get out of things, remove out of your numbers too a lot of personal stuff. So if you've got your toy card in there, you've got to get that out, right? Because that'll impact your EBIT, right?
Shout out to my mate Dave, who put his whole house through the business and then wondered why his business wasn't worth shit.
Yeah, and then wonder why I'm not going to buy that. But that's what. See, that's the thing. That's why you got to start planning now. People are going to want to look over like 2-3 years, the last 2 or 3 years from your financials, right? So they're going to want to look back and go, okay, I can see that there's been growth. So a business come in, okay, cool, and not top line. I'm talking about bottom line, right? Oh, you've gone from a profit of 100K.
Not growth in debt.
Not growth in debt. No, we're going up, right? But if I'm coming in, I'm talking, hey Jonesy, give us a look at your books, and you've gone from $100,000 profit, operating profit, to $300,000 to now $500,000 profit, and it's showing that it's been less reliant on you. Big thing too, your culture. Are you developing a really good culture with a good operating rhythm? That's really delivering on your promise out there in the market. That's huge. De-risk employment documentation. Now, the amount of people that still haven't got an employment agreement locked and loaded, company policy, function roles, okay, clear KPIs. Do they do performance conversation reviews? All these key things. If you haven't got that, it's a risk. Systems as well, like we were talking about before, about marketing. Have you got a marketing system there that I can just plug straight in and the leads keep coming? Or does it rely on the owner to manually pull all the switches? So, training videos as well. Like, do you have workflows for every different type of role? Is there a nice little workflow with a video, with reference material that you can get a first-year apprentice and you can, from a training competency matrix point of view, that they can see their journey. Okay, I've got to get to here after first year, second year, third year. Are you setting your team up to thrive and what we call setting them up to win, right? So these are all key things that de-risk the business.
When somebody's coming along to potentially acquire a business, like all this stuff you're talking about here, like you and I know it's valuable for the running of the business, but is it something that people actually consider? Or they just come along and they go, how much profit have you made? The point I'm trying to make is, like, you could spend, and I have, years building out, procedures and policies and all this kind of stuff. But is it really worth the pinch of shit at the end of the day if it's not a direct reflection of profit?
Well, it's a twofold thing. Like doing what we just said, talking about success habits and working through, obviously, all your agreements, your team training, or talking about strategic alliances as well, that's going to lead to good profit anyway, right? So what we're talking about here is good profit. The problem you've got is people put things in, but they haven't got the success habits in place. They haven't got their operating rhythm in place to make sure that they're what we call hyper-focused, right? So inch-wide, mile-deep focus. So they make the most of their job management system, they make the most of their marketing system, they make the most of their team. Most people will just put it in and then just leave it, right? They're leaving, again, money on the table. They're missing opportunities to really grow. And in this day and age where we talk about less is, if you want less is more, you want less people, get all your systems, all your structure, all your success habits locked and loaded, and your team will fire. But so that's going to drive profit, right? So this is the key thing. Even if you don't want to sell team out there, this is going to help you drive profitability right now.
Sure.
So it's the
old cliche, isn't it? Like, you build it to sell even if you never intend to.
That's right. And that's what I say to people. That's great. How good is that? Don't sell it. But now you've actually got a going concern that potentially you just put an operations manager in. This is the key outcome here. Put an operations manager in. You get passive income of $200,000, $300,000 a year. That's not that's a good little earn, right? But this is as you know, mate, you've heard me talk about 1,000 times. That's got to get out of the tradie mindset. It's not about the job. You got to get in the business performance mindset where it's all about the valuation. It's about the asset. It's about building a business that can really serve your lifestyle. Too many people are running a tradie business right now. They think this is just a means of an end or to get a wage. if you want a wage, as you know, shut the business down now and go work for someone else.
Switch off.
Guaranteed super, guaranteed holidays, and more importantly, you can go home and play with the kids and not think 24/7. Yeah. So this is the big opportunity, and this is the big game that a lot of people play. But coming back to it, what you were referring to, does it matter to have all this de-risk, all this information, to de-risk it? It does depend on the buyer, right? So if you're going in a strategic buyer, and look, we've done a couple of agreements and some people that we've been associated with where they got a number of different businesses and created a consortium. So about 10 businesses that are all each turning over about $5 million each, rolled into one, and then they went an IPO. So
And rolled into profit equity.
the due diligence on that is massive.
Yeah, I've seen this. I've heard this.
So it comes down to the individual. If you want a big payday and you want to get the right buyer, then do this. If you're just going to sell it to a current employee, you're not going to get a real big chunk of change, and the employee is not probably going to care about it anyway. So it depends on the level of buyer. Because often, again, a lot of people will just sell it to their right-hand man, or that's a normal one. But you're not going to get the sort of what I'm talking about, a potential $1 million plus windfall, from your 28-year-old who's got a kid and a $3 billion mortgage living on the eastern suburbs.
So let's speak now, I suppose, businesses out there that like the idea of building something that in 3 to 5 years they could potentially sell.
Yeah.
What does that look like? Where should they start? What should they do? Mission critical? How do they get cracking with this?
And through the Institute, we've got a lot of, it's called business readiness, right? So there's a business readiness program that we put people through, which just identifies, again, gives them a current valuation of where they are from a multiplier in their industry. And then it works through all the key areas like the red and green flag type scenario. But first and foremost, it is because people also too with exit, they've got to understand this is a big thing, especially when we talk about mental health. A lot of people, it's been their baby for so long. And we've seen some people who actually successfully sold, but then they've got nothing to do and they actually become quite depressed. So it's like, okay, well, what is the plan after that as well? So the key thing as a starting point that we get with everyone is obviously get your life partner or your other business partners together and start talking about, well, what does a potential exit look like? Where's the potential value in the business? And potentially start also talking to potential buyers. So start actually seeking out those sort of potential people who might, who would want my client list, or who would want this team member, who can my business bolt on nicely as a strategic alliance with another organization. So it always starts with the planning, because often, you've got to go through the business readiness. It does take time. You've got to put a lot of effort in, and to sort of jump into the business readiness without sort of thinking about a long-term plan, often you're not going to get the benefit out of that as well. You sort of tick a box and just go through it. But a business readiness plan is key. And this is the thing where we're looking at the whole revision is like this, is your pricing. So in other words, if we come back to it, and this sort of starts with profitability, your pricing, have you got preferred supplier pricing in place as well? Talk about agreements there in that regard. Things like, again, the quality of your clients right now. So the things that you can do right now is start to improve your clients, become that expert in the space, with what we were talking about before, getting those really key leads coming through. Start saying no to clients. Start increasing your team engagement and productivity, building the culture in your organization. That's key. Implement success habits. So implement weekly success habits. In other words, reviewing team meetings on a weekly basis, reviewing job profitability trackers, educating clients. So have a regular routine as an owner that provides not only you clarity and consistency, but everyone in your team actually provides them confidence, because, hey, every week's the same. And that then provides consistent outputs. Is that cool?
Sure.
Things like numbers in as well, as we know, we go through your 12-month profit plan budgeting. Where do you start? You've got to start doing an audit through your whole organization. We got a formal process for that, but people can informally start going, okay, well, let's just unpack my business and let's just look at what I need to improve on.
I think one of the biggest shifts that like I made to my business was um well lately anyway, over the last 4 or 5 years, whatever, was implementing like a financial management system. We rolled out Profit First into the business, and it just changed everything, because all of a sudden we just knew there was a fund allocation, and there was going to be, we had like clarity over numbers within the business, and it gave me the ability, and our clients that are using it as well, the ability to make better decisions based on data, and not feel like you need to take on the next job because of like financial reasons or whatever it is. There's just always money available. You can do it.
Yeah,
And I think for most trade
that's right.
businesses out there, that conversation is so far from what they know. It's like fucking talking Martian. It was for me, certainly. Like, I mean, I know you used to be a tradie, you went through the whole finance model, so you're right on top of that. But like, it's really common, I think, for people like me who went through the trades and they didn't really have that understanding of finance. And then all of a sudden you're like, we run a business now. You got to learn it. Like, I didn't even know what a fucking profit and loss statement was at one point.
And look, on the numbers, and we talk a lot about this, and like, as you know, create the cube,
Yeah.
to try and build some financial intelligence and trying to allow people consistent terminology, get out of the accounting jargon. But essentially and this is where a lot of people still have trouble, is that your reports out of your job management system have different metrics. Like, I might say my margin on my labor, my cost over what I'm going to charge out my labor, and that'll give me a margin on that. And often people say to me, I'm making a good margin on my labor. And I say, okay, well, let's go and have a look at so that's your micro report. Let's go have a look at your macro report. And if it's in our system as the how you track report, or like such a P&L, I say, where on that P&L are you tracking? Because this is the truth. Everyone needs to understand your P&L is ultimately, agree, that's your source of truth. So the profit on the bottom line of that's what we're talking about. That's your actual value. You might think in your job management system you're killing it, but if you haven't got profit showing on your profit and loss, no one's going to see any value in that. So, but what they do is they look at their profit and loss, and I say, show me on that profit and loss where you are. Where's a metric that measures margin on material or margin on labor? Nowhere. Correct. So all your reports, and this is where the struggle comes, everyone's talking different languages. The job report's saying that's in English, your accountant's telling you Arabic, your bookkeeper's telling you Chinese, your friend down the pub's just talking gibberish, and it's very, very hard. So that's why we're about that consistency and having the same language, so people know cost of sale, really key metrics. So people are, and it's all about the percentages, and it's nothing about the numbers. And when people understand the power of percentages, it's just like, this is unbelievable. How good is this? They're all and when you can educate your team to understand the numbers, they will go from zero to hero really quickly, because they're like, oh, thank good. Because coming back to it too, when you're talking about, this is what people need to understand. Good people, want to know how to win, right? Good people want to know how to win, and how to win. They need to track. They need to track. Well, how's my performance? So, good organisations, good operators, enlighten their team members, give them transparency on the numbers, so that they can actually make better decisions, which then allows for better overall outcomes. But it starts from having good financial metrics. A lot of businesses in the trading mindset, oh no, I'm not going to give they're fearful of sharing information. If you want to drive a business that operates without you, you've got to share information. But more importantly, if you want to win the war on talent, which we're really win the war on talent, which is we've got a model on how to really effectively attract, recruit, induct, retain, and basically supercharge or power up their team. You've got to have that mindset of it's an investment, and it's as it takes time. A lot of people. It's a massive differentiator. When we talk about the way we do it, and that's a great thing with our community who go through, obviously they're on our Power Up journey. They're just like, their team members are just killing it. Like, they're really going well and developing apprentices into operations managers. It's so good to see. And again, it's great when business owners can go away for 8 weeks and they come back, and your clients basically say, like we said at the get-go, your clients basically say, you should go away more often. The boys are nailing it. And more importantly, it's making more profit than when they were there. So, but that's not going to happen unless you invest in it. So coming back to what we're talking about, 100%, get your financials in place. Get your processes in place. So all these things that we talk about, it's going to positively impact the short term, which is the now, and improve cash flow, profitability. But it's also going to position you for that potential successful sale 2 years, 3 years, 4 years, whether you're actively looking for it or what happens, mate, when you actually are operating more, your brand's well known, your team member, you just see there's a good culture, your team rock into the suppliers, they're on point, they're in, they're out, good banter, they're always calm, they're methodical, they get stuff done. What do you think happens to those sort of organizations over time? What's your tagline? With organizations that are just implement what we just spoke about, they start to transform their team. So in other words, their team's more highly engaged. There's more intent. They're in and out. They're better planning. They're calm because they know exactly what's happening. Their clients are stoked because they're constantly delivering on their promise. Everything, suppliers are happy. Everyone's happy because they're in their rhythm. They're meeting with them. They're building win-win partnerships. So what ultimately happens to that brand? They get noticed. They get above the pack. So it's like if I'm a potential buyer, what sort of organization I want to, that's what I'm trying to say. So you really stand out.
Yeah.
So straight away you're above the pack. And if there is a good potential investor, hey, this brand is definitely noticed. It's going places. So again, it's all connected. But you got to, if you want to maximize the value out of your business, don't leave money on the table on that D-Day when that exit does happen. Again, coming back to it, whether it be death, disability, disaster, disagreement, right, divorce, you just want to make sure that if it does happen, you can maximize that exit.
Well, I hope that guy gave you guys a bit of food for thought there. I mean, it's one of those things, again, so far from probably what a lot of you have known, and through no fault of your own, we've had this conversation a million times on the show, and I've had it with you a million times as well, Matty, like coming out of the trades, there are things that you just have, if you're going to succeed in business, you've got to go out there and you got to look for this information. You don't get taught this at TAFE. Like, these are things that, if you want the answer, you got to go look for it, Anyway, mate, thanks so much for your time. Once again, I have to not leave it so long in between recordings next time. So I'll leave some show notes to your website. I'll leave show notes to your the free copy of your book, which I thoroughly encourage you guys to go check out, even though I claimed it to be mine in the past. It is not actually mine. When is my sequel coming out, actually? When is my sequel?
It's mine.
People keep asking.
Yeah, we're working on the sequel. We might be working on the sequel together.
Absolutely. And anyway, if you guys have any questions or have any experiences, or you want any follow-up or anything we've spoken to today on that topic or anything related, let us know. Jonesy's always willing to come back on the show and share his expertise in these fields. And I really encourage you guys to go check out the program. It's a really good one. So, Matty, thanks again, mate. Look forward to chatting in the future.
Cheers, Jonesy. Thanks, mate.
New Zealand-based home renovation company, 6,593% ROAS. Sydney-based solar company, 2,700% ROAS. Hunter region-based bathroom renovation company, 5,616% ROAS. Melbourne-based building company, 13,182% return on ad spend. Adelaide-based solar company, 2,881% return on ad spend. Guys, the list goes on and on. If you're a trade-based business and you work with projects like roofing, solar, bathroom renovations, kitchen renovations, anything like that, head across to tradie.wiki/pod for podcast. Tradie.wiki/pod for podcast. Book in a conversation. It is game changing.